the fact that silver went from 40 to 50 uh, is only validation of the thesis for those people who needed validation. And were silver to decline from 50 to 40, that wouldn't matter much either, except for the people who were trading that move on margin. That what generates real price moves is simply the imbalance between buyers and sellers. I think maybe the second thing that makes judging silver pricing as a function of industrial demand difficult is the fact that on the supply side, most silver doesn't come out of silver mines. It comes from recycling, or it comes from a byproduct of other metals. So you have this weird thing with silver that when the silver price goes up, it doesn't necessarily stimulate supply. An increasing copper price or zinc price or lead price might stimulate supply, but an increasing silver price doesn't seem to do that. It might encourage more recycling, but it's a very, very odd metal.
Many investors are anxious about the recent decline in gold and silver, but Rick Rule, one of the most seasoned and successful natural resource investors, says that this is a cleanup rather than a crash. According to Rule, the market is only purging the weak hands and rewarding those who are patient, as it normally does prior to a significant increase. According to him, the current volatility is a good correction that fortifies the basis for the upcoming bull market phase rather than an indication of weakness. Real possibilities arise when fear takes over and emotion is low. Investors are frequently reminded by Rule that the best deals are discovered during periods of extreme pessimism. In this video, we'll discuss Rick Rule's most recent observations on precious metals, why he thinks current correction is paving the way for future spectacular gains, and how disciplined investors may turn today's market anxiety into tomorrow's wealth. If you want more content on precious metals investing, be sure to like, subscribe, and click the bell.
Before we turn our attention to investing in silver as individual investors, I had the opportunity to visit with Pierre Lassonde a couple of weeks ago, and he picked a very interesting gold target. Not quite sure where his math or method came from, but he picked $17,250 by 2030.
But you're absolutely right. What matters in a silver bull market, in my experience, the three that I've lived through in my lifetime, is investment demand. The delta between buyers and sellers in the investment market.
That's the end of it? It's that simple?
Yeah. I mean, I've been aware of the arguments around the physical utility of silver for a very long time. I remember when photographic demand went away. And I remember in the middle of photographic demand going away, one of the damnedest spikes I've ever seen in the silver market. It was really difficult for me to explain that away in any other way than observing the fact that in the investment market, there was a lot more buyers than sellers. And I understand the implications of increasing photovoltaic demand. I understand the incredible implications of silver's efficacy as a water treatment item, or a anti-germicide. I get all that, and I think it's important. But it would appear to me that what generates real price moves is simply the imbalance between buyers and sellers. I think maybe the second thing that makes judging silver pricing as a function of industrial demand difficult is the fact that on the supply side, most silver doesn't come out of silver mines. It comes from recycling, or it comes from a byproduct of other metals. So you have this weird thing with silver that when the silver price goes up, it doesn't necessarily stimulate supply. An increasing copper price or zinc price or lead price might stimulate supply, but an increasing silver price doesn't seem to do that. It might encourage more recycling, but it's a very, very odd metal.
Would you say that silver is a monetary metal, or
yes,
would you say it's lost its monetary characteristics?
No, I think it is. It might be a monetary metal in drag, but I note that one of the functions of a monetary metal is that savers believe that they can, if they need to, transact in it, but it is also a store of value. And that's an important aspect of silver, particularly in South Asia, Pakistan, India, Bangladesh, and Sri Lanka, where people have 1,000 years of experience with the debasement of government currency. People, when they can, often choose to store their wealth in precious metals. And for a couple 100 million people in South Asia, the unit cost of gold is too high. They store their wealth in silver.
Mm-hmm.
And in that sense, it is a monetary metal. And I happen to know from having been there, but also watching the behavior of South Asians in Dubai, that not only is it a store of value, but it is in fact a unit, an informal unit of exchange, which is the definition of a monetary metal.
One of the things that make gold such a good monetary metal and reserve asset is the very large fixed above ground stock compared to its flow. So basically all the gold ever mined is around in some form or another. It's 216,000 tons. I'd say half is in jewelry and in museums and in teeth. So if we take what's left, it's about 15 trillion of sort of above ground investable gold in some price or another. On the silver side, I think it's one of the great mysteries of the world, how much silver is really above ground. And why that's important as a monetary metal is if you have this above ground stock that people covet and hold, even if it's in the form of jewelry or silverware to some degree, if there's this stable above ground stock of silver versus its flow, that adds to its monetary value. So my question to you, and this is just sort of a fun question, how do you estimate the above ground stock of silver? What do you think we got?
I've been trying for 20 years, Trey, and my track record is unblemished by success. I remember back to the point in time when Buffett was believed to have between 15 and 20% of the world's above ground supply of silver. And of course, normal tightment plus Buffett's cachet caused the silver price to escalate fairly dramatically.
Mm-hmm.
And then it got crushed. And I remember the silver bull saying it was another example of manipulation. What it was in fact that the silver price doubled in US dollar terms. The US dollar doubled against the rupiah, and they either had a flood or a bad harvest or something in India. And the Indian peasantry had a choice between selling their silver or watching their kids starve. They made the correct decision. And a bunch of silver supply that nobody knew existed came on the market. And that event caused me to decide that I was never going to be able to decide what the above ground supplies were. And frankly, that I was never going to be able to time a silver bull market particularly correctly. I had to satisfy myself with the fact that silver moved after gold had established the narrative, and that if I was 2 years early, that the price movement in silver made being early not a problem. Silver pays so much rent when it moves that you can easily afford to be early, and you cannot afford to be late.
Rick Rule begins with a timeless reminder that in a long-term bull market, short-term price fluctuations are meaningless. When investors start to lose faith in paper assets and switch to real assets, investment demand rather than industrial demand is what actually pushes silver prices higher. Silver, in his words, is a monetary metal in disguise. Millions of people still use silver as money and as a store of value in nations like Pakistan and India. For many, it's real money that you can hold in your hands, the poor man's gold. Silver's fundamental monetary identity comes from this ingrained trust. The entire stockpile of silver is still unknown, in contrast to gold, whose worldwide supply is well documented. Rick remembers how Warren Buffett once controlled more than 20% of the world's known supply of silver, which caused prices to skyrocket until unanticipated reserves from India surfaced as residents sold silver to get through difficult times. That incident demonstrated how erratic and dispersed the actual supply of silver can be. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
Very interesting. So the media, the financial media, tends to follow what's easiest to follow. So I've read many more articles than I care to admit about the dwindling stocks at the LBMA and COMEX. And for a second, throwing aside the Trump tariff influence, which in my opinion has brought a lot of metal from LBMA to COMEX, I think that you would agree with me. I'm not putting words in your mouth, but I think looking at those stocks is very short-sighted because would you agree that there's a lot of silver in repositories and global wealth has a tendency to want to be unnoticed. So there's a lot of silver out there that doesn't want to be discovered. So would you agree? I mean, I'm in the sort of 6 billion ounce camp, or is that roughly where you're at?
I don't try.
Okay.
I'm laughing, Trey, because you and I were at Sprott together as colleagues in the last silver squeeze. And at that point in time, North America was short of silver. And you may recall at Sprott that the Sprott Physical Silver Trust was growing ridiculously. And they cleaned out the silver in Toronto, then they cleaned out the silver in Ottawa, then they cleaned out the silver in Chicago, then they cleaned out the silver in New York, and they had to bring silver from London. Now we have a situation where London's out of silver, and so they got to clean out New York. But the other point you make is that there's a whole bunch of silver that isn't good delivery COMEX or good delivery LBMA silver, but it'll find its way in the system over time.
Right.
And by the way, if the silver price was to fall back from whatever it is today, 50 and change to 40, it wouldn't derail a precious metals bull market. It would change a whole bunch of people that got the religion of silver in the last 4 weeks and make them doubters. But that doesn't matter.
Right.
I mean, it'll matter to them if they get whipsawed, but it doesn't matter. The fact that silver went from 40 to 50 is only validation of the thesis for those people who needed validation. And were silver to decline from 50 to 40, that wouldn't matter much either, except for the people who were trading that move on margin. Well, we certainly have a near-term squeeze. You can, given the spreads that the industry has historically enjoyed, you can afford a 3.5. You can afford a 3.5 or 4% lease rate, not a problem. A 35% lease rate, that's catastrophic, as you know. Many of the traders are running 10 or 15% equity to assets. That does more than eliminates the margin. I think the lease rates that you quote, 35% for the near month and 9, 10, 11% further out, talk a lot about the market's belief that, as you had suggested earlier, there is silver out of system that can, over time, come into the system. I remember conversations that you and I had 2 decades ago where we both sort of chuckled and said, over time, markets work. The cure for high prices is high prices. The cure for low prices is low prices. And that really ultimately price in the very long term is a function of utility. In the very near term, these high prices might be problematic for traders. That's what the lease rate suggests. In the long term, you have to look at the utility of precious metals for savers relative to the utility of the U.S. 10-year Treasury. that one makes me long-term bullish.
Very good point.
During the most recent significant silver squeeze, Rick Rule and his coworkers at Sprott saw firsthand how quickly actual silver supply may disappear from major marketplaces. At the time, dealers were forced to ship silver from London because the Sprott Physical Silver Trust was growing so quickly that it depleted supplies in several places. Rick points out that the physical market has grown so tight that even London is running short of deliverable silver, but he doesn't lose his composure. He claims that if silver dropped from $50 to $40, it would only drive out the short-term speculators that flocked in during the current run, not put a stop to the bull market. This type of pullback is just noise to careful investors. Rick draws attention to one of the most obvious indicators of market stress: skyrocketing silver lease rates. For short-term contracts, the cost of borrowing actual silver has skyrocketed from 4% to as high as 35%. For leveraged traders operating on thin margins, many of whom have just 15% equity supporting their positions, that is disastrous. It doesn't indicate a collapse in fundamentals. In summary, Rick Rule's message is realistic and upbeat. Even drastic short-term adjustments are a necessary part of the process. The long-term decline in fiat value and the growing international acceptance of precious metals as genuine wealth repositories are what really count. These erratic fluctuations are not indicators of impending peril for patient investors, but rather that the next stage of the bull market is just getting started. Thanks for watching. If you like this video, give it a thumbs up, subscribe, and turn on post notifications so you never miss an update.